So far, it has been a very strong year for the U.S. economy, and many people are looking back on President Trump's first year in office and thinking that it's been excellent for markets and for employment and for business. But what would happen if China decided that it wasn't going to keep buying U.S. Treasuries? That's a story that's been printed by numerous news outlets in the last week or so. It hasn't gotten that much attention, but it could be a really big deal. Well, to help us look at what it would mean, we've got New York Times bestselling author James Rickards on the phone. He is the author of Currency Wars, The Making of the Next Global Crisis. James, great to have you.
Great to be with you, Buck.
James, tell me what would happen. Let's just start with that before we get into more of the thesis of your book. What would happen if China decided to stop buying U.S. Treasuries?
Well, at the margin, they're the largest foreign holder of U.S. Treasuries. Actually, the people with the most Treasuries are the U.S. Federal Reserve. But that's how they print money. When they print money, they buy U.S. Treasuries. So they've got about $4 trillion on their books, but China has over $1 trillion. So between the Fed and China, you've got $5 trillion of the total $20 trillion of U.S. national debt. So China's a huge player. At the margin, it would tend to make interest rates go higher. That means everyday Americans would pay more for their mortgages, credit card rates would go up. It would definitely have a slowing effect on the U.S. economy. But when I saw the same story you're referring to. I obviously watched it closely. To me, it wasn't something they were actually going to do anytime soon. It was more of a shot across the bow, a warning to the Trump administration. Don't mess with us on trade because we can hit you back in the Treasury market. So this is what the kind of financial warfare is all about.
Tell me, though, about what an actual currency war with China would look like, and how would it start first?
Well, we actually have some experience with this. In 2009, I was asked by the Pentagon to help facilitate it was their first ever financial war game. As you know, war games are conducted all the time, but this was the first financial war game. The only weapons were stocks, bonds, currencies, commodities, and derivatives. We did it at the Warfare Analysis Laboratory down in near Washington at the Applied Physics Lab. We had participation from the uniformed military, CIA, the Fed, the Treasury, a lot of outside experts. We did it for 2 days, and in that scenario, China and Russia teamed up to acquire gold. Have a new gold-backed currency issued out of London, basically run the dollar off the road. We got kind of laughed at it at the time. A lot of people said, oh, that would never happen. But since then, since we did that with the Pentagon in 2009, China and Russia have tripled their gold reserves. So things are actually playing out the way we sort of told the Pentagon at the time. But right now it could happen on a lot of fronts. It could happen with gold, it could happen with cryptocurrencies, it could happen with treasuries. China is very unlikely to dump their treasuries. The oldest joke in banking is, if I owe you $1 million, I have a problem. But if I owe you $1 billion, you have a problem because you have to collect it from me. Well, right now the United States owes China $1 trillion, over $1 trillion. So I would say China has the problem because the president with one phone call could freeze the Chinese treasuries. If they ever did anything kind of untoward or disorderly in the treasury market, the president has the authority with one phone call to call the Fed and the Treasury to freeze those securities. He wouldn't default on them. He would say to the Chinese, hey, we'll keep paying you interest, but we're just going to freeze them for now until you get back on your best behavior. So that's one way a currency war, financial war could play out.
What is happening right now with our currency, though? I mean, a lot of people will be asking questions like, we're at $20 trillion in debt. There's been all this gamesmanship, all this stuff going on with the Fed and monetary policy. But for most folks, James, right now it feels like everything's fine. How would things not go? How would things all of a sudden not be fine when we're talking about U.S. currency?
Well, Buck, when you say gamesmanship by the central banks and the Treasury, that's exactly the right word. They've been kind of manipulating things behind the scenes. So you're right. When you say the economy's fine, I think what you really mean is that the stock market's going up. Well, that's for sure. Stock market's gone up, I think, about 30% since President Trump was elected. That feels good to a lot of people. But the economy's doing a little better, but not a lot better. I'm very skeptical of the impact of this, the tax bill. But the problem from the Chinese perspective, this whole financial war is coming to a head. The president has been itching to do something on the trade front. Remember, he said he was going to, tear up NAFTA. He has not done that. He said he was going to build a wall with Mexico. That hasn't happened yet. So there are a lot of things that Trump has talked about that he hasn't actually done. But one of the things he would like to do is hit China with some sanctions on steel, aluminum, and some other solar panels and some other things. The problem is the president needs China's help on North Korea. So the reason the president has held off on the trade war with China is because we're looking for their help with North Korea, and that's a subject you've been following closely. But China hasn't really done that much. They're talking a good game, but they haven't really done that much. Oil's still getting into North Korea. It's still being smuggled in. They haven't really put the stranglehold on North Korea. So I think the president's getting fed up with that. Trade Representative Lighthizer has been itching to put on sanctions. Wilbur Ross agrees. So I think we'll see a trade war with China, and then they'll just kind of fight it out in the currency market and the bond market.
We're speaking to James Rickards, New York Times bestselling author of Currency Wars, The Making of the Next Global Crisis. James, I've got your book right in front of me here, and it certainly makes one think that we could face a global crisis when it comes to currency. How do you think that is most likely to happen? How would it happen?
Well, see, right now, of course, the dollar is getting a lot weaker, and we see that in the price of gold. Everyone says, well, the price of gold has gone up over $100 an ounce in the past few weeks. And people go, oh, gold's going up. Well, the way I think about it, gold's not really going up. What's happening is the dollar is going down. So, yeah, the dollar price of gold is higher, but that's just like a symptom that the dollar is getting weaker. Believe it or not, the Federal Reserve actually likes that. The reason is it increases the price of imports. It actually brings some inflation into the U.S. economy. The Fed wants inflation. They've spent 5 years trying to hit their target. They have not hit their target of 2% inflation in 5 years. So the weak dollar actually helps them to meet their target a little bit and lets them keep on track to keep raising interest rates. But the problem is, inflation is mostly a psychological phenomena. It takes a long time to turn the ship, but once you do, inflation can spin out of control. We saw this in the late 1970s. So, yeah, there hasn't been any inflation through all this money printing in the last 8 years. But the reason is that people have not had inflationary expectations. They're still kind of licking their wounds from the meltdown in 2008. But if that changes, it would be very hard for the Fed to contain the change. It can change very quickly. Again, we saw that in the late 70s. So one of the dangers here is that the Fed plays the weak currency game, fights the currency wars with a cheap dollar, and again, we see that in the higher price of gold. But then the inflation actually kicks in, and expectations change, and then people start to dump dollars to buy, other hard assets, gold, silver, land, fine art, anything, and turnover increases. So I think the Fed is playing with fire here in terms of setting off a potentially dangerous inflationary cycle.
In layman's terms, James, what is a currency war?
A currency war is two countries who cheapen their currency to steal trade advantage from their partners. So we're not always in a currency war, but when currency wars begin, they can last for 10 or 15 years, and I talk about that in my book. My book, Currency Wars, came out in 2011. Here we are in 2018, and we're still in the same currency war. Reporters will go, oh, there's a new currency war. Well, no, I say, no, it's the same one. It's just been going back and forth. Currency wars happen when there's too much debt, not enough growth. It's exactly the situation we're in today. Too much debt, not enough growth. Same situation the world was in 1919 after World War I. So what countries do is they try to get a little growth by stealing it from their trading partners. So if I cheapen the dollar, well, guess what? My Boeing aircraft exports they're a little cheaper to foreign buyers. All U.S. exports are cheaper. Imports are more expensive because we're trying to buy them with a cheaper currency. So that improves the trade deficit. That's good for growth. And like I say, it helps big exporters like General Electric and Boeing and so forth. So that's the theory. The problem is that there's retaliation. So I cheapen the dollar. Well, Europe comes along and they try to cheapen the euro, and China comes along and they try to cheapen the yuan and so forth. So it just goes back and forth like two kids on a seesaw, and it's a negative-sum game. Everybody ends up worse off. Nobody wins. But the temptation is always there to give your economy a boost with a cheap currency. So the Fed's doing that right now today. The dollar is getting weaker, and maybe the U.S. is getting a little boost to go side by side with the stimulus and the tax cut, but it won't last. Again, there'll be some retaliation from China sooner or later, and that's how the currency wars play out.
If Trump could, if Trump read your book, and maybe he has, by the way, but I just mean if you were to read it again, let's say, and was to take one thing from it that he could do or that the government could do right now to try and address some of the problems that you've described for us, James, what would it be?
Probably buy gold. Russia's doing it. China's doing it. You have to ask yourself, Buck, Russia and China have tripled their gold reserves in the last 9 years. Russia has gone from about 600 tons to almost 2,000 tons. China has gone from, again, around 600 tons to almost 2,000 tons, although China has a lot more than that because they're non-transparent about it. So you have to ask yourself, are the Russians and Chinese stupid, or do they see something we don't? Well, I've been to Moscow and Beijing. I'm sure you have too. They're not stupid. They know what they're doing. And if they're acquiring that much gold, they have to be getting ready for some kind of international monetary collapse or reset. And I would say one thing the U.S. could do to increase its strength and beyond playing defense, actually strengthen its hand, would be to get more gold itself.
Is the music going to stop on the U.S. economy, James?
It will, sure. These financial crises come along almost like clockwork every 7-8 years. You know, you go back October 19th, 1987, stock market fell 22% in one day. That would be the equivalent of 5,000 Dow points today. Not 500, but 5,000. 1994, the Mexican crisis. 1997, the Asia crisis. 1998, the Russia crisis. 2000, the dot-com meltdown. 2007, the mortgage meltdown. 2008, Lehman AIG. We haven't had one since 2008, but as I say, the history says they come along every 7-8 years. We're not in a good position for one right now, but whether it's the currency wars, a natural disaster, a shooting war with North Korea, a trade war with China, there are a lot of catalysts out there, and the stock market could drop like a stone.
James Rickards, author of Currency Wars, The Making of the Next Global Crisis. James, great to have you. Thanks so much.